Hey there, awesome viewer. I'm James and I'm beyond excited to have you join me on this epic adventure today. So, I'm here to give you the best of what YouTube has to offer. So, together, we will discover the art of Forex trading and equip you with the knowledge and skills to navigate the market with confidence. So, whether you're a complete beginner or an experienced trader looking to enhance your skills, this series is designed right for you to take you from the basics to advanced strategies, empowering you to make informed decisions and seize profitable opportunities in the forex market. So in this series, we'll cover a wide range of topics, including understanding currency pairs, interpreting and price charts, fundamentals and technical analysis, together with some risk management strategies and techniques, and even much more. So anything you can think about. We will also explore different trading styles from day trading to swing trading and long-term trading. Don't worry if you don't understand these terms, you get into them very soon, which will allow you to find your own path in this vast and dynamic market. So on this channel, we explore all things related to Forex, from tutorials to tips and to anything you can imagine. So for me, building a strong community of people who share interest in the Forex market is the main goal of this channel. And I want this to be a space where we can share knowledge and ideas and advance together. So get ready to share your thoughts, ideas and suggestions in the comment section. I can't wait to hear from you. Please kindly hit the subscribe button and the post notification bell because you don't want to miss out on any of our exciting content. Be the first to get our videos. Join us on this thrilling adventure where every video promises to be entertaining and educative. We'll be covering market participants in our next video, and you certainly don't want to miss it. So sit back, relax, get some notes, and get ready for an incredible ride. It's time to step into a world of infinite possibilities. Today we are embarking on a journey into the fundamentals of Forex trading analysis, or how different market participants see the market. Mind you, in our previous video we did talk about Forex fundamentals. So let's get into today's video. So in a previous video, we did talk about currency prices increasing and depreciating. So we want to get into how to find whether a certain currency is going to increase or decrease. So basically, we have three ways, or market participants analyze the market in three ways. The first one we have is fundamental analysis. Fundamental analysis is the study of the relative economic strength in countries. So with fundamental analysis, we are comparing two countries based on how their economy is performing, or based on how the country is performing. And mind you, note that every currency is tied to a certain country. So the weaker the country becomes, the weaker the currency will be. So that's how those who do fundamental analysis see the market. And then we also have market sentiment, or sentimental analysis. So sentimental analysis is when traders make decisions based on what other market participants are doing. So don't worry, we'll get into it, but that's the basic explanation for it. And then we have technical analysis, which is the study of price patterns using a chart. So let's get deeper into some of these things. So with fundamental analysis, I was saying that it is the study of the relative economic, social and political dynamics that influence the supply and demand for one country's currency in relation to another. So I didn't mention this in the explanation I gave you earlier. But what you have to understand that is not only the economic indicators that we use. Sometimes we also have atrocities, or we can have political events also affecting the forex market. So in simple terms, what I'm trying to say is that when you are making fundamental analysis, you have to look at different economic indicators to determine whose country will be stronger or weaker. So that's all that we are doing. In the previous lessons, we look at when to buy, when we made mention that we always make reference to to the base currency. So let's say in a case where buy, you come into a conclusion that the base currency, or let's say GBP USD. So GBP USD is the United Kingdom and the dollar. So if you come into a conclusion that the United Kingdom the economy is going to be stronger, then you start buying the GBP USD. So that's all that you are doing for fundamental analysis. So with fundamental analysis, the better the shape of a country's economy, the more foreign business and investors will invest in that country. So just as a rule of thumb, the better the shape of a country's economy, the more foreign business and investors will invest in that country. So let's look at this diagram here. As you can see from this diagram, you can see that this economy is in a good shape. So that country's currency will be increasing. So you see that it is moving up. Let's look at this one too. The economy is bad, or they are in a bad shape. So you see that investors will not be investing into that country. Then the currency will be depreciating. And then in relation to atrocities and the political events affecting the market too. Now we can look at COVID. The United States was one of the countries which was largely affected by the COVID. So when you look at the price chart, or when you look at the chart, you will see that during the COVID period, you see that the dollar was depreciating massively. So it's not only the economic indicators that we can use to make these decisions. Sometimes when you find out that, like for example, especially when you're looking at the war between the Russians and the Ukraine, somebody can make a decision based on that to whether buy or sell a certain currency. Yeah. So, and then apart from COVID too, there's another thing also called Brexit. So Brexit was like when the UK was trying to move away from the European nations, and then during that period, that thing caused a panic in Forex investors. So some people were taking their money from the pound, and then the pound was depreciating massively. Yeah, so that was as a result of it. So we'll be taking some examples, and then we'll be relating it to our previous lesson to test our understanding on this thing. So let me show you where you can find some of these informations. So Trading Economy or Trading Economics is a site where you can get access to some of this information. So just like you can see here, you can see we have some economic indicators here. Economic indicators, we basically have the GDP, can talk about inflation rate, jobless rate, interest rate. The GDP, we have the year on year, we have the quarter on quarter, and then into anything, debt, current account, population. So just like you can see here, we have different countries are displayed. So let's say maybe if you are trading the GBP USD, you can compare the United Kingdom, how the economy is how it's performing in terms of their interest rates, jobless rate, and all those things. You compare it to the United States, then you find out which one is doing better. For the scope of this video, or for the scope of this lesson, we are not going to get into these things, but as a rule of thumb, just have it in mind that you can get some of these informations. Now, these are not the only economic indicators that we have. You have a lot of things. You can talk about the core price index, which is the CPI, a lot of them. So after this lesson, I want you to come over right here, Trading Economics, and play around some of these economic indicators. There are a lot of them that you can look at. These are not the only ones. Yeah, so that's it for fundamental analysis. The next site you can also look at is, we are going to make very good use of this site a lot, which is Forex Factory. So I want you to play around this one too. Now you hear a lot of traders saying, oh, news events, you are trading news events. So when you are talking about news event is not like you be on the TV or you be listening to your radio to find out a certain news. On this site, we have the date, we have the time, we have the currency, and we have the impact. So every day you come to this site here, and then you find when a certain news is going to come. So today is 12. So for today, these are the news events that we have for today. Tomorrow's news events are also there. So every news is there. So you just look at the date, when the date the news will be released, and we have the time here. The pairs are here. We have the GBP, we have the JPY. GBP is the British pound. JPY is the Japanese yen. And then, so with this site, these are what the market participants make decisions based on. So we look at the previous, we look at the forecast and the actual, and then depending on what these three things are telling us, we can make a decision on it, whether to buy or sell a certain currency. So let's look at it. You can see that we have 4 different colors here. We have the red one, we have the yellow one, and we have the orange one, and the ash color. So These red news events are the news that have a higher or massive impact on the market. So during this news event, you see that the market makes massive movement. Movement as in whether when it is decreasing massively. And then when it is depreciating what? Massively. So that's one way of analyzing the market. Yeah, so traders usually pay very keen attention to this news event because these are the news that make an impact in the market. Now, this one too are at low impact news. Low impact news, market participants do not take them into consideration. We barely look at it because they don't make any impact on the market. They barely have any impact on the market. And the third one is what? The orange color. The orange color is just like the medium one. They also don't make any impact on the market. And then the last one we want to look at is the ash color. So the ash color is for bank holidays. Now, when you are talking about Forex Fun Fat and Secret, we talk about this, how the decentralized market came into existence. So before the decentralized market, the Forex market was recorded even in the history, was recorded in the Bible. So the Forex market has been there from the ancient times, since time immemorial. Yeah, so, but when we're talking about the decentralized market, where you do not have to be in a geographic location in order to participate in the market, that one actually started in 1972, and during those period, only institutions were allowed to trade in the market because in order to participate in it, you needed huge sums of money. So it was until the early 1990s when we got the introduction of brokers, forex brokers, who enable individual traders to also participate, or retail traders to also participate by providing us with leverage. Don't worry about leverage if you are completely new here, and we'll talk about it in our subsequent videos. Yeah, so the actual strategy that I'm going to teach you, we are going to trade the footprint of the institutions, because you cannot trade like the institutions. They control huge sums of money, so you cannot trade exactly like them. But what we are going to do is that we are going to follow their footprint. So after they've done what they want to do, we'll just be following their footprint. So during this ash colored news, I don't want you guys to be trading. You can decide to trade, but what you see is that during this time or during this period, you see that the market will just be ranging. The market will just be moving sideways. So you literally be wasting your time in such news events. So what we do is that, for personally, what I do is that I always uncheck these ones, so that I'll not have this one on my chart, and I keep these two on because I want to notice when the bank holidays are coming and the high impact news events are also coming. Yeah, so that's it for fundamental analysis. I hope it's okay for you guys. Yeah, so we'll look at some examples in a bit, and then we'll test our understanding on it. So always have this in mind. Let's get into the examples. So always have in mind, like the other time in our first lesson, I made mention that the base currency is always the basis for the buy or sell, or the base currency is our bias. So the base currency is not just the GBP. Always the base currency is the currency which is first. So when you are looking at the GBP USD, we are saying the GBP is the base currency because it is the first currency. Had the USD been the first one, then that one would be our base currency. So let's get into some examples. So have this in mind. Make sure you jot this somewhere. The base currency is always the basis for the buy or sell. So we are looking at these three examples. The first example that we are going to look at is the euro dollar, EUR USD. So in this case, the euro is the base currency, and that's the basis for the buy or sell. Right? So if you believe that the US economy is strong and the euro will be weakening against the US dollar, you would execute a sell for euro dollar. What am I trying to say here? So I said that if you believe the US economy is strong, so in this case scenario, the US economy is stronger, and then this is a simultaneous situation. So once the US economy is stronger, it means that the euro is going to be is going to be weaker. So when that thing happens, then it means we are going to place a sell order, because the euro, which is the base currency, is going to be weaker. How did we get this information? We can get you can derive some of the information from where? From trading economics. We'll not get into it right now, but yeah. So that's how that works. So that's the example for the euro dollar. Now let's look at another example on USD/JPY. So USD/JPY, in this example, the US dollar is what? Is the base currency, and that's the basis for the buy or sell. So if you think that the Japanese government is going to weaken the yen in order to help its export industry, you would execute what? A buy order for what? For USD/JPY. So in this case, we are saying that what? The Japanese government is weakening it. They are weakening what? The Japanese yen. So if they are weakening the Japanese yen, it means the US dollar is what? It's going to gain more strength. As compared, it's a relative situation, so we are always comparing what? The two of them. So the USD is gaining strength, this one is losing strength. So it means that we are going to what? Place a buy order for what? For JBP/USD. And then once again, if you believe the Japanese investors are pulling money out of the US financial market in converting all their US dollar back to yen, so in that case, it means that there is a high demand for what? For the Japanese yen. There's a high demand for the Japanese yen. And then when you're talking about supply and demand too, currencies actually move, price actually move because of what? Supply and demand. So the higher the demand for a certain currency, the stronger the prices will be. So because there's a high demand for the Japanese yen, because they are converting their money to what? Into yen, because there's a high demand for it at the moment in time, people will what? It means that this one is going to be stronger and this one is going to be weaker. So because this one is the base currency, what are we going to do? We are going to place a sell order for the USD/JPY. So as simple as that. Now the final one that we are going to look at is what? The GBP/USD. So with the GBP/USD, in this case, the GBP is what? Is the base currency, right? So if you think the British economy will continue to do better than the US in terms of their economic growth, you would execute a buy for what? GBP/USD. So in this case, the GBP is what? Becoming stronger and stronger, whilst the USD is what? Becoming weaker and weaker. So in that sense, you place what? A sell order for what? You place a buy order, you place a buy order for the GBP/USD. Yeah. And then I said, how can you get this information? You can make this information based on what? These economic indicators are telling you. There are a number of sites that you can get some of these economic indicators. But for the scope of our lesson, let's just stick to these ones. So you can make your research, any country that you want to find out, you can just be playing around it. Forecast, whatever. So when you are looking at the United States, so this is what for United States. You can see their GDP, you can see the prices, health, money, trade, government, business, consumers. So everything. This for United States. You can look at Russia, how their country is basically performing. Their everything. Yeah, so just be playing around it. Yeah, so let's move on to the other type of ways, or the other ways that markets fundamental analysis, just like I said, is not the only way market participants analyze the market. That's just one part of it. The next one that we can also talk about is what? Market sentiment. I already said market sentiment is like when we are making our decisions based on what other Forex market participants are other Forex traders are thinking. So sentiment analysis or market sentiment is used to gauge how other traders feel. Yeah, so that's it. All about sentimental analysis. So it has been proven statistically that the majority of traders feel. At this point, I know some of you are panicking already, but don't panic. This is as a result of lack of proper education, or sometimes our emotions get into our ways. That is what makes trading a little bit difficult. Like I've been telling most of my students, that if you really want to become a successful trader, you shouldn't always focus on only on how to analyze the market. There's a difference between an analyst and a trader, right? So the things that I'm going to teach you about the technical analysis, that's not the only thing that you should focus on. You have to focus on a lot of things, like how to manage your emotions and all those things. Yeah, so you guys can actually make it, and that's why I'm here for you. I'm going to show you the right way to trade. So don't be worried about this. The stat that I just showed you. So because we have this in mind, that the majority of traders lose money in the market. Now, RG Client is a broker. So what RG Clients, what they do is that they compile or they collate all the positions their traders are holding, and then they'll just put it online. So maybe for a person like me, if I know that the majority of traders lose money statistically, I just look at what they are doing and take the opposite side of what they are doing. So when you are looking at this one, I'm pretty sure some of you don't know about long and short. But when you see long means we are buying, short means what we are selling. In our next class, when you are talking about, in our subsequent class, when you are talking about the forex names, you get to understand these things. So when I know that the majority of traders lose money, in this chart you can see that 36% of their traders are buying, while 63% of their traders are selling. So because I have a stat that shows that the majority of traders lose money, now you can see that majority of them are 63% of them are selling. So what I can do is I can start buying. Now this way of trading is not so reliable. You cannot make decisions based on just this one. You lose money a lot of times. You have to couple it with some other things. Alright. So you cannot make your analysis only on this one. See, so that's it. So you can just be playing around it. It is actually called IG client sentiment. You can get a whole lot of pairs. So this pair is AUD, Oxy dollar. The majority of traders are bullish. So 61%. There are a lot of information you can get here. So that's it all about market sentiments. You are making decisions based on what other traders are also thinking. That's not the only thing. Now, in the cryptocurrency, I don't know if you've heard about Shiba, but Elon Musk literally made a tweet about Shiba, and then in a couple of minutes, Shiba price skyrocketed. Why? Because Elon Musk said something about it. Elon Musk made a joke about it, and people started buying it. This is as a result of market sentiment. You are buying based on what somebody or a group of people are thinking. So that's it all about market sentiment. Now, if you know Donald Trump is somebody who talks a lot. So anytime Donald Trump made any comments about the US dollar or make any comments, you see that it is going to massively affect the dollar. If Donald Trump makes any tweet about anything, you see that the market will be shaking. So people are making their decision based on what Donald Trump said. So that's it all about sentiment analysis. The last one that we can also talk about is technical analysis, which we said is the study of price patterns. So the theory is, with the technical analysis, the theory is that a person can look at a historical price movement and determine the current trading conditions and the potential price movement. And then it is based on the history that it is based on the adage that history tends to repeat itself. So technical analysis look for similar patterns that have formed in the past, and they will form their trade ideas believing that price could possibly act the same way that it did before. So when you are looking at technical analysis is not rocket science, right? Some of my students were complaining that anytime they see the chart, somebody even said he's not good at e-maths. So how is he going to analyze this complex market? It is not actually complex. So with technical analysis, all that you are going to do is that you are looking back in time to find out what has happened already, what has happened in the future, and what sense can I make from it. So this style of trading is a trade I actually took. This style of trading is called smart money or supply and demand. So this one is a little bit, it's not complex, but there are a lot of things I have to talk about. So let's just use this simple one. So when you are looking at, if you see somebody looking at the chart is not rocket science. What is happening here is that, the sense they are trying to make from here, just like the explanation that I gave you recently, we are looking at price patterns. So you see that this is actually called a trend line. So I'll show you in the future how to draw these trend lines. But let's see, the first time price touched this trend line, there was a reaction as in it was moving up. When it touched this trend line, it started dropping. The second time price came closer to the same trend line, the price started dropping again. So the next time price touches the trend line, people can anticipate selling, because they believe there's an entity behind this trend line, or there's an entity behind this place who are pushing price down. So anytime price touches the trend line, people will start selling. Yeah, so let's look at this. sell here, when the price go to this place, the same way, from this place to this place, the market was moving up. And when it finally touched this trend line, we started what? We started selling. So the next time, so these are our future price action. So when you are looking at the chart, you are not going to see all this all this information. These are all real time. So because there has been a reaction here, there has been a reaction there, there has been a reaction here, you start anticipating that the next time price touches this same trend line, you'll be selling. And then finally, if the price, as you can see here, when it got to this place too, there was another selling. And then when price is able finally to break this trend line, then you know that those who are selling are not at this place anymore. So you can start buying and buying and buying and buying. So this is actually called a breakout. So don't worry, we'll dive deep. For the scope of this lesson, you will not get deeper into things, but just have it in mind that way. So that's it. Let's look at some more examples. Let's look at this one too. There was actually a reaction here. My chart is not showing it, but there was a reaction here. The second time there was another reaction too. Market participants can start anticipating that the next time the price comes back to that same trend line, because there has been a first reaction, second reaction, they can start buying anytime the price touches this one. Buying as in the price will be increasing. So you see that the next time price came to touch the same trend line, people were buying again. People started buying again. And the next time price touches here, the price moves up. The next time price touches here, there was another reaction. The price moves up. The next time price came to touch the same trend line again, people were buying. So when you are buying, you can take profits at any place. You can take profit at this place. You can take profit at this place. You can take profit at this place. You dive deep into how to trade this way, but just have it in mind this way. So yes, that's basically the three ways we analyze the market. You said fundamental analysis, market sentiments, and technical analysis. Some people are actually hybrid as in they combined various market analysis. So for me personally, I use the fundamental and technical analysis together. I barely use the market sentiment, because it's not so reliable, right? But you can combine two of them. When you combine two of them, it's a massive combo to give you more confluence as in more confirmations. Yeah, so that's it for how we analyze the market. So I hope to see you in the next video, and remember to stay curious, wanting to know more.
Do it! Just do it! Don't let your dreams be dreams. Yesterday, you said tomorrow, so just do it! Make your dreams come true! Just do it! Some people dream of success while you're going to wake up and work hard at it. Nothing is impossible. You should get to the point where anyone else would quit, and you're not going to stop there. No, what are you waiting for? Do it! Just do it! Yes, you can! Just do it! If you're tired of starting over, stop giving up.